Trade Live earnings season rolls on, and PayPal is among the names reporting this week when the company is out with earnings tomorrow morning. So analysts expect adjusted EPS of $1.19 and revenue of $8.25 billion for the third quarter. The stock is down, though, more than 15% year to date, so it has been struggling. It is up today 1.5%. So let's go inside out on PayPal ahead of tomorrow's all-important earnings report card. So joining us now is Nick Rach, CEO of the Earnings Scout. Thank you so much for your time, Nick. What are your expectations for PayPal?
You know, we think it'll probably exceed expectations. This is a company that's had to have its expectations reset because of increased competition. You know, you mentioned it's down 15% over the last year. Over the last 4 years, this is a stock that was near $300 stock that's into the 70s now. So it's lost almost 70% in values. The market has repriced in increased competition from the likes of, Apple Pay, Venmo, and Cash App. So PayPal has a large user base, but it has to try to gain some of that market share back that it's lost over the last several years in digital payments.
And as we know with the earnings, it's not just about what they do, it's about what they say. So with a lot of the competition, as you say, priced into this valuation right now, and obviously we've seen the stock struggling this year, what has the company got to say now about the outlook?
Well, we want to see the outlook get better or less bad would be a good case here. The good news in here is as the stock has reset, if there's a silver lining for it, is those expectations have been reset lower. The market has priced in a lot of the bad news and lost market share. So it's a lower hurdle for it when it does provide its outlook to eventually, hopefully, we don't want to just see beat, but we want to see beat and raise guidance at increasing rates here. And there's been no trend over the last year in its earnings and in its earnings estimate revisions, and that's one reason why the stock has struggled. So we want to start to see improvement in the outlooks, and maybe that the worst of what we expected on PayPal is behind us.
Yeah, but you still say in your notes that you believe that the upside is limited given the competitive environment. So, what's this company got to do for a little bit more conviction?
Yeah, the upside may be limited. It doesn't mean the stock can't still do well, but relative to other names that you can purchase in this environment where we think we're in a bull market, where we're having earnings expectations as a whole improve, there'll be many outperformers over PayPal. But PayPal we don't think is going to languish anymore. We think a lot of that bad news is priced in. We just think there's better risk-reward opportunities out there.
Just give us a sense of you looking across the broader sector, how it sort of stacks up against its competitors and what they've sort of been doing.
Well, it does have a large user base still that it has in there. It just needs to get market share that it's lost to the other digital payers back in there. So it does have a good large user base, and I think that provides the floor here that we probably are at. But to get upside in the stocks, it needs to start taking that market share away and growing it faster. So we need to see the company start to provide that in the outlook and ways it's going to do that to become more constructive on the name.
And from a macro perspective, I mean, as far as what some of the banks have told us, what some of the credit card companies have told us about, how the consumer is spending, I mean, does that give you any sort of clues as to what we're likely to hear across this space as well?
Well, the consumer just has been certainly resilient. Every time we think the consumer's out, the consumer keeps going. And for whatever reason, the good, bad, the ugly on why the consumer still spends and why we're having it continues to happen. And so we think that environment will at least be very good for PayPal and other digital payers and even banks as we go forward, particularly with the Fed set to cut rates even further this week.
Okay, all eyes on PayPal. It is sitting up a comfortable 1.5% today ahead of those earnings. Thank you so much for that. Nick Rach, CEO of the Earnings Scout, joining me. Appreciate your time. Let's trade it now, as always, with Tom White, host of Next Gen Investing. Happy Monday to you, Tom. What's your example trade for PayPal?
Yeah, so implied volatility in the near-term options really elevated going into this report. The option market pricing in about a plus or minus 8% move in the shares, nearly $6 either way. And, to your guest point, if you don't know which direction it's going, but you want to play maybe some of the implied volatility levels across different option series, this strategy takes advantage of it. It's a need a move type of strategy, about that 1 standard deviation that the option market's priced in at this point. So I went out to the November 7th weekly cycle that expires in 11 days, and we're going to buy the 77 strike call, and we're going to buy the 65 strike put. Both out of the money, one to the downside, one to the upside. And then in the near term, October 31st weekly options that expire in just 4 days, we're going to sell those same strikes, the 77 call and the 65 put. So creating a double calendar position, out of the money call calendar on the 77 strike, out of the money put calendar on the downside on the 65 strike put. You're going to pay a debit of roughly about 45 cents for this double calendar position. So there's your risk. $45 per spread, but you can see here from the risk profile, I've got a nice wide range of about between 61 and 81 to remain profitable on this. And why is this such a low cost entry point to a strategy where you needed to move towards either strike? Is because you're buying about a 70% implied volatility in the November 7th weekly options that expire in 11 days, and then selling about 103% implied volatility in the near-term October 31st weekly option. So that vol dispersion really lowers the price entry point on this type of trade. Now, when you get that move that you want, implied volatility levels are going to come down in the options really quick. We're going to see that vol crush in the near-term options. It's going to come down in the options that you own also. But if you look at this type of strategy, what don't you want to happen? Well, you don't want the stock to kind of sit here near 71 in the middle between those two strikes, and you don't want that 2 or 3 standard deviation move to the outside, either to the downside or to the upside. So those are the scenarios that you don't want to happen. The idea here is you take advantage of that vol dispersion, really low cost entry point here on a need a move type of strategy, but you want it to kind of either grind down towards 65 or grind up towards 77 to get max profitability on this type of strategy.
A good look at PayPal there with an example trade for you, sitting up over 1% in trade today ahead of these earnings. It's going to be an interesting day tomorrow ahead of the Mag 7, isn't it, Tom? Because we do have a number of other companies, Visa, United Healthcare, Royal Caribbean, UPS, all reporting out tomorrow. All very interesting individual stories, to say the least. Just want to sort of, just before we let you go, get your overall sort of thoughts on the market and what we're seeing out there as far as the price action today. Yeah, a lot of catalysts. The optimism's out there for sure, because you've got positive trade talks, right? The government shutdown still in its 27th day now, so that's a concern. But then you've got earnings, and over 175 names are going to be reporting out of the S&P 500 this week alone. 5 Mag 7 names. So there's a lot of catalysts out there, but I think if you look at it, Sam, the optimism is still out there across the board that we're going to get through earnings. The beat rate right now for earnings about 85%, according to FactSet right now, on the names that have already reported, over 150 S&P 500 names. So that's been a positive. If that continues, the Fed cuts a quarter basis points, we get some trade deals. It's setting up for nice gains, which we're seeing today. Yeah, certainly a lot of positive catalysts being priced in right now, particularly, as you say, with the Fed and what we're hearing from the earnings, beating expectations there at about an 80% or more rate. But thank you so much for joining me, Tom, and thank you for your time.